Welcome to ShortView Trading, it's your morning market hit for Monday, 7th of September. What matters today and this week for traders? Well, what a wild ride it's been in the Nasdaq. Two very sharp down days, whether you look at closing price action or intraday price action on Thursday and Friday last week. Not surprisingly, in some senses, there was a lot of frothiness in the Nasdaq. Early last week, we were flagging up the chart of the Nasdaq's uptrend and showing to you how the index had moved above the top end of that channel early last week and was looking really frothy. And indeed, there's another chart that we're showing you now, the Nasdaq relative to its 200-day moving average, showing you how overextended it's become relative to that 200-day moving average at a level that's only been surpassed in 99, 2000. So it was very frothy. It was also overbought and models were on sell. So no wonder it gave back a chunk of those gains. And interestingly, on Friday, intraday, once again, it touched the bottom end of that uptrend channel. So largely taking out the first part of this move, expurging all the initial frothiness from prices, getting back to an initial key support level. Whether or not it holds there, very difficult to say. I think the next few days price action must be watched closely in the Nasdaq. It's far too speculative to make a punt here on whether or not one should buy this index, or indeed whether actually it's started a renewed downtrend that might be more of a two-day basis, a multi-week or even multi-month basis. So we'd be cautious about getting involved in the Nasdaq here after such vicious down price action. It's very difficult to know exactly how the next few days will play out. But what is interesting is the movement in our short-term market timing models, many of which are really back or close to getting back to buy, having given a clear sell signal early last week, picked up that downside in markets. The message of the models is moving much more towards the buy message now and becoming much clearer. Short-term technical market timing scoring system for the S&Ps in front of you now. Plenty more of those in today's daily rag, including our risk appetite scoring system, put to call ratios and the like. So for full details on how we're approaching this market, please see today's daily rag. Clearly the buy case is brewing, so it's interesting to see the detail laid out in models and written form in today's daily rag. It's available on the website to subscribers. Please take a look. So what are we watching today and this week? Well, today, to be honest, pretty quiet, not much going on at all. It's US Labor Day, US markets are closed, and no real key macro coming out across the globe. Three key events over the course of this week, though, amongst many others that we're keeping an eye on, including the ECB on Thursday with their policy meeting and their press conference following that from Lagarde. No change expected, but of course the euro has been strong. The language from the ECB may well change, hinting at further stimulus further down the line. Over and above that, we've got Chinese total social financing. This is the biggest, probably the biggest data point out of China every month. Aggregate lending, how much are they putting into the system? Of course, that's how much and how they control a lot of their economic growth and drive it. And then over and above that, we've got US inflation on Friday. It was quite perky last month. Will that continue? That's a key question. There's a big debate out there about inflation going forwards from here. Is it inflation or is it deflation? Monetary inflation, clearly not Phillips curve driven, and so on. So that's it from us. That's your morning market hit for Monday, 7th of September. Thank you for listening. Please do subscribe on YouTube. Simply search under ShortView Trading, or follow us on Twitter, LinkedIn and or Facebook. Thank you for listening. Trade well.